Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, January the 25th. I'm going to take just a brief minute to discuss what markets did last week. Another positive week in the equity markets, with the S&P 500 up 1.17% on the week, leading all major indexes as we had a return back to that mega cap growth for the week. Last week, the mid cap index was up 45 basis points or 0.45%, and the small cap index as measured by the S&P 600 was up 10 basis points or 0.10%. And so what we've seen so far to the start of this year is we've really seen a back and forth in the equity markets. We started the year and finished the year with the broadening out of the equity markets, a very healthy move in the equity markets, because for most part of the year last year, the market was led higher by 7 stocks. We all know about that, but we have been going back and forth of fears of, well, the Fed now, because of inflation where it is, may not cut in March, and the Fed activity may not be there. Maybe inflation is going to be stickier than longer. Maybe the soft landing is not going to be there. Maybe we do hit the recession. Those fears have been coming back and forth so far this year, and so you will literally see one day the broadening out of the market, and then the next day the selling off of those stocks that were up, and you're buying back into the mega cap tech stocks. Now, what we talked about is we really last week, and what we've been talking about for this year, is that we really believe that there was going to be some volatility on the onset of this as we're navigating through earnings and the Fed and all of that. But we get fourth quarter GDP today. The expectation was for growth of 2%, and we far exceeded that at 3.3% growth for the quarter. And then on top of that, the price indexes were all less than expectations as well, showing prices have come down, giving greater cause to the soft landing. And that's why you're seeing a more broadening out of the markets today. You're also starting to see some corporate earnings, and you're seeing some big moves to the upside and positive moves on corporate earnings. So what we're seeing so far from earnings has been great, but we're just now getting into the throes of it, and we do get those big mega cap tech names next year. So what does this mean with inflation and all this moving forward and GDP is that we really do believe by the end of the year you will see the broadening out of this market, and that will be leading the market higher. Because growth last year was up 40%, value was up 8%. Those divergences historically have not been able to withstand themselves and continue that far. That doesn't mean that growth still can't be positive for the year and still have great returns. AI is going to be a great catalyst for tech stocks and for things along those lines for the continued growth. When you look at a company just the size of, for example, Microsoft growing at a $3 trillion company growing at 30%. It's amazing growth. So you still have opportunities to move this market higher. And so you have that opportunity. And so if you feel like you've missed the last 9, 10, 11 weeks in the equity markets and you're saying, well, we're at all-time highs right now, is there room for the market to move higher? There's $8 trillion on the sidelines in short-term treasuries and money market funds. Eventually the Fed's going to start lowering rates. When the Fed starts lowering rates, those short-term bonds and those short-term money market funds are less appealing to the returns that you can get in the equity markets. You may start to see some capital inflows into the market off of that. But also just think about the productivity increases and the opportunity that certain industries and the infrastructure bill and the CHIPS Act and AI have opportunities for growth and engines in this country and this economy to keep us moving forward. So we project the markets continue to move higher this year and finish the year on a positive note, and that's one that we feel happy about and happy to report on. And one of the things that we'll leave you with is the past 16 presidential re-election cycles, and the S&P 500 has actually finished the year positive. So we believe history will repeat itself the 17th time. So if you have questions about how to navigate this time and earnings and what's going on in your individual portfolio, please feel free to give us a call. We'd love the opportunity to talk to you. You can reach us at 904-346-3683. 3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thank you so much.